Hello, YouTube. iBankerU. Stand by for news. China has already won the AI war. American companies like Anthropic and OpenAI badly lost sight of their customer. Let's examine. Let's say you are the CFO of a Fortune 500 company. Your primary job, of course, is to gain profitable market share, called alpha, at the lowest cost possible. Say you were in a capital budgeting meeting, and say your company has decided in that same meeting that you are all in on AI. Now you need to integrate AI into your enterprise tech stack, so you call your CIO, jet off to Pebble Beach, and after 18 holes of really badly played golf on an amazing course, you get down to business. Door number one, an American vendor whose projected costs are 10 times their Chinese competitor, and their models may perform marginally better. Or door number two, the Chinese competitors whose models perform nearly as well for 1/10 the cost, possibly cheaper. The ice cube in your old fashioned has not even begun to melt before you have reached consensus to call Accenture in the morning to begin ramp up for the Chinese AI platform. What might that mean for the typical retail investor with a 401k? Well, stop everything you're doing right now. If you own the S&P 500, if your retirement is invested in index funds, or if you've ever wondered why NVIDIA became one of the most valuable companies in human history, then the next few minutes could change how you see the entire market. Because what if I told you the biggest risk to the American stock market is not inflation, interest rates, or even Washington, not even a recession, but it's a story. A story that American companies will make trillions of dollars from artificial intelligence because the rest of the world has no choice but to buy it. But what if that story is already beginning to crack? What if France, Germany, Spain, and some of America's closest allies have quietly started looking for an exit? What if some of America's largest and best known companies have already pulled the plug on their own AI experiments? And guess what else? What if China isn't trying to beat America's AI, but simply make one that's 90% as good for 1/10 the cost? And history has seen this before many times. It happened with railroads. It happened with the internet. It happened with the group of desperate men who left everything behind to chase gold in California. Almost none of them became rich, but somebody did. And tonight, I want to show you why Wall Street may be digging for gold while somebody else is quietly selling the shovels. Because understanding the difference has created fortunes for nearly 200 years. This is now the rest of the story. Every generation believes it has discovered the future. Every generation. And every generation is right. What it gets wrong is who will make the money. AI. We've seen this movie before many times. Example, 1849. Thousands abandoned their homes. Farmers left fertile fields. Shopkeepers locked their doors. Bank clerks quit steady jobs. Entire families crossed continents chasing a rumor buried beneath the rivers in California. Gold. Most never found enough to justify the journey. Many returned poorer than when they left. Yet fortunes were made, not by the miners, though some did, by the men who sold them the picks. Most did. The blacksmiths who forged the shovels, the merchants who sold the boots, the bankers who financed the expeditions, and history has a peculiar habit of repeating itself, not in the details, but in the incentives. Today, another gold rush is underway. Only this time, prospectors wear hoodies instead of cowboy hats. Their wagons are data centers. Their rivers are fiber optic cables. Their pickaxes are graphic processors. And their promised treasure? AI. Wall Street calls it inevitable. Silicon Valley calls it revolutionary. Governments call it strategic. Investors call it the opportunity of a lifetime. And perhaps they are right, but history makes a different question. Not whether the technology changes the world, but whether today's price already assumes that it will. That distinction has humbled smarter men than us. Railroads transformed America. Electricity transformed civilization. The automobile reshaped commerce. Even where we live. The internet connected humanity and then divided it. But every one of those revolutions changed history. Every one produced spectacular financial excesses. And technology can be genuine, while investments can become irrational. Those are two entirely different conversations, but today, America is spending extraordinary sums building artificial intelligence. New data centers rise almost overnight. Power plants are being planned, transmission lines extended, semiconductor factories expanded. Hundreds of billions of dollars flow towards one expectation, that the companies building today's AI infrastructure will someday earn trillions in return. And that's an attractive story. And stories are always sold well, especially on Wall Street. But every great investment story eventually encounters a difficult companion: math. Numbers possess an annoying habit. They don't care how exciting the story sounds. One question always remains: who ultimately pays? Artificial intelligence promises astonishing productivity. Write documents, analyze contracts, generate software, design products, answer customers, accelerate research. The possibilities appear endless. Yet another question quietly waits beneath the excitement: who captures the economic value? Because creating value and capturing value are rarely the same thing. The airlines connected the globe. Many airlines still went bankrupt. Railroads united continents. Thousands of railroad investors were wiped out. The internet changed everything. Thousands of dot-com companies disappeared anyway. History reminds us that revolutionary industries often produce disappointing investments, not because the innovation fails, because competition succeeds. Consider today's landscape. The United States currently leads the world in frontier AI development. Its models remain among the most capable ever created. But capability alone does not guarantee dominance. Competitors learn, costs fall, alternatives emerge. That process has already begun, and across the Pacific, Chinese developers have embraced a different philosophy. Instead of building the single most advanced model at any cost, they often pursue the models that are simply good enough, cheaper, smaller, open, available. For many businesses, perfection is unnecessary. A customer service department doesn't require genius. An insurance processor doesn't require poetry. A logistics company values reliability more than brilliance. If one system performs 90% as well at a fraction of the cost, economics begin replacing engineering. History smiles knowingly. And it has seen this movie before. Superior products frequently lose to superior economics. Another greater quiet shift is occurring. Increasingly, businesses are asking an uncomfortable question: should our most valuable data leave our building at all? Every contract, every design, every pricing model, every customer relationship, every trade secret, these represent decades of accumulated advantage. Companies are understandably cautious about sending that advantage into somebody else's computers, in effect, training their digital replacements, which explains why many organizations now explore running AI themselves, not renting intelligence, owning it. History appreciates ownership. Rental payments enrich the landlord. Ownership compounds for the tenant. Then there is the matter few enthusiasts enjoy discussing: profitability. Traditionally, software possesses a beautiful characteristic. Once built, it can be sold millions of times, and each new customer costs very little. Margins expand, profits compound, and artificial intelligence changes that equation. Every prompt consumes electricity. Every response occupies computing resources. Every interaction incurs expense. Serving more customers does not merely increase revenue, it also increases cost. And that does not mean the business model cannot work. It simply means the mathematics deserve careful observation. Markets occasionally become so captivated by profitability and possibility that they postpone demanding proof until one day they don't. Investors possess extraordinary patience right up until the moment they lose it. Curiously, bubbles seldom burst because reality suddenly changes. Reality changes slowly, but narratives change overnight. The housing market overlooks healthy until suddenly it didn't. Internet stocks promised limitless growth until they didn't. Confidence rarely exits through the front door. It slips quietly out the back, often disguised as routine earnings calls. Perhaps a chief executive mentions moderating investment. Perhaps a project gets delayed. Perhaps financing becomes more expensive. And none of these headlines sound dramatic, but together they alter belief. Markets move on belief long before accounts record the consequences. The stock market resembles an auction. Every buyer bids according to tomorrow's expectations, not yesterday's facts, which raises one final observation. History rarely punishes optimism. It punishes certainty. Certainty that no competitor will emerge. Certainty that margins will inevitably improve. Certainty that governments will never interfere. Certainty that customers will remain loyal. Certainty has emptied more brokerage accounts than recessions. None of this argues against artificial intelligence. Quite the opposite. AI may become as essential as electricity, as commonplace as email, as indispensable as the smartphone. But technology may exceed every expectation. Yet extraordinary technologies and extraordinary investments, not always the same thing. The telephone transformed communication. Many telephone companies disappeared, though. Automobiles transformed transportation. Thousands of manufacturers vanished. The winners changed history. The losers financed the lesson. Perhaps that is the greatest misunderstanding of every financial revolution. People assume the future belongs automatically to the pioneers. Pioneers famously got arrows in their backs. History has taught us that it actually belongs to the patient observers. The investors willing to ask one uncomfortable question while everybody else celebrates, not what could happen, but what has already been priced in. There is wisdom and enthusiasm. There is greater wisdom in financial discipline. Wall Street often forgets the difference. You don't have to predict the collapse of artificial intelligence. You don't have to dismiss the innovation. You simply need to remember that every generation tells itself one irresistible story. This time it's different, and sometimes the technology truly is different, but human nature never is. Greed still accelerates. Fear still follows. Capital still rushes towards whatever promises effortless wealth, and eventually, somebody remembers to count the dollars. Perhaps today's AI boom becomes the greatest investment opportunity of the century. Perhaps it becomes another chapter in a long history of financial overconfidence. No one knows for sure, but anyone who claims certainty probably deserves the least confidence. But history offers one dependable guide. Watch where the incentives lead. Watch who actually earns the profits. Watch who carries the debt. And watch who owns the infrastructure. And above all, remember the California gold rush. Millions dreamed of discovering gold. A handful did. But the men who quietly sold the picks slept very well indeed. I'm not asking you to fear the future. I'm asking you to recognize it through the tens of thousands of historical lessons. View through that lens of the historical past. Because fortunes are not usually made by following the loudest story. They are made by understanding the quieter one, the one unfolding beneath the headlines, the one hiding inside the balance sheet, the one history has been trying to tell us all along. So if somebody tells you this time it's different, don't argue with them. Just smile, nod politely, and quietly check to see whether they're selling AI stocks, AI consulting, AI conferences, AI books, AI ETFs, or perhaps an AI-powered toaster that writes poetry while your bagel burns. Because history suggests there's always somebody making a fortune during a gold rush, and it's usually the fellow selling maps to the people who can't read a compass. Sleep well tonight. The robots probably aren't coming for your job tomorrow, but if one calls you asking to invest in its startup, Tell it to send a business plan. And we will read the footnotes first. And now you know the rest of the story for why China probably has already beat the US in the AI model race. Build that stack. iBankerU. Good day.